All right, let's jump right into an absolute blockbuster of a market debut. Today, we're looking at an event that completely redefined the global robotics landscape. And honestly, it signals a massive shift in how everyday people are investing in our automated future. So consider this your explainer on one of the most explosive IPOs we have seen in recent memory. We are talking about the Chinese humanoid robot maker, Unitree. And guys, they didn't just have a good day on the Shanghai exchange. Their shares surged over 600% right out of the gate on their trading debut. You heard that right. That is not a typo. 600%. It's just a staggering figure that immediately caught the attention of markets worldwide. So what does a 600% surge actually look like in terms of real market value? Well, at its peak, that meteoric rise briefly pushed the company's market capitalization past an astonishing $59 billion. To put that in local currency, we're looking at 400 billion renminbi. Just that single day of trading firmly placed Unitree right among the ranks of China's absolute most valuable companies. So let's move into part one, the phenomenon, and that incredible 600% surge. Let's zoom in on the raw numbers here to fully grasp the sheer scale of what happened on the trading floor. When you look at the pre-debut expectations versus the post-debut reality, there's just this massive gulf. Unitree's initial public offering was priced at a pretty grounded 150.8 renminbi, which is right around $22.36 per share. At that price point, the company had a very healthy valuation of about $9 billion ahead of the debut. But once trading actually kicked off, the stock gained as much as 629% before pulling back just a tiny bit to settle at about 578% higher. I mean, leaping from a $9 billion valuation to a $59 billion peak in a single session, that is truly historic. Which brings us to part two. Meet the dancing robots. Now, you might be wondering, who exactly makes these highly valued robots, and why on earth is there such a massive appetite for them? Well, the answer actually lies on Chinese television. You see, Unitree boasts massive, and I mean massive, brand recognition domestically. They aren't just some faceless tech manufacturer. They're a legitimate cultural staple. Their humanoid robots are incredibly famous for entertaining literally millions of people by dancing, jumping, flipping, and even boxing at the Lunar New Year galas. And if you know anything about media markets, you know these galas are among the most watched television events in the country. So all that primetime exposure, it created an incredibly strong public connection to the Unitree brand. But here is the absolutely crucial point. They aren't just for show. We aren't just talking about televised prototypes here. The company is actively scaling its production and proving its real-world commercial viability. In fact, Unitree actually shipped 5,500 humanoid robots last year alone. So they've successfully made that really difficult transition from television spectacles to actual mass-produced hardware. Moving right along to part three, the retail investor frenzy. Let's look at how this intense cultural familiarity translated into an absolute retail investor frenzy at the Shanghai exchange. The sheer scale of demand from everyday people was just staggering. The specific tranche of shares set aside for retail investors was oversubscribed an eye-watering 5,500 times. Let that sink in for a second. For every single share available to the public, there were 5,500 requests to buy it. It was an absolute stampede. To put this into a professional perspective, Kenny Ning, a strategist at Everbright Securities International, points out that this overwhelming oversubscription reflects tremendous investor enthusiasm for the company. And he notes that this is fueled heavily by Unitree's sky-high brand recognition among the general public in mainland China. Basically, people weren't just buying a tech stock. They were buying shares in the dancing robots they literally recognized from their living rooms. And this perfect storm of government support for new technology firms, combined with intense, culturally driven investor excitement, has pushed Unitree's trailing price-to-earnings ratio to almost 1,200. Now, a P ratio that high is astronomical, and it really underscores the absolutely massive growth expectations currently placed on their shoulders. Investors are betting heavily, and I mean heavily, on a very, very profitable future here. To really fully grasp why Unitree captured so much onshore capital, we kind of have to look at the competitive landscape. When we compare Unitree to its largest competitor, Agibot, we see that Agibot is actually still a private company. And then another major rival, UBTech, is publicly listed, but they're listed over in Hong Kong. So this unique positioning means Unitree stands out entirely on its own on the mainland exchange. As Ming Li, the head of Greater China Autos and Industrials Research at BofA Global Research explains, this IPO makes Unitree a rare, pure-play humanoid robotics company in the Chinese A-share stock market. because retail investors on the mainland just don't have many other options to purely invest in this specific futuristic tech. Unitree basically captured all of that pent-up demand. Ming Li notes that this debut will now provide a clear valuation anchor and really serve as a path reference for the subsequent listings of a lot of other Chinese robotics companies. All right, let's transition to part 4, global ambitions and headwinds. However, as we zoom out to the broader macro global landscape, this explosive domestic enthusiasm is meeting some very serious geopolitical headwinds. It's definitely not entirely smooth sailing ahead. Just last month, the U.S. Federal Communications Commission, or FCC, banned imports of humanoid robots. Now, this is a regulatory move that is widely recognized and seen as directly targeting Chinese products, very much including those manufactured by Unitree. So the really crucial point here is how this geopolitical tension impacts the company's bottom line. Take a close look at this revenue breakdown. Unitree is actually highly vulnerable to international bans because over 40% of their total earnings comes from overseas revenue. And the United States alone makes up a really significant chunk of that, accounting for anywhere between 13.3 and 18.4% of their earnings, depending on the year. Which leaves us with a pretty provocative final question to ponder as we wrap up this explainer. We've seen the incredible power of mainland brand recognition and massive retail investor hype, but can overwhelming domestic enthusiasm truly sustain a $59 billion robotic empire if lucrative international markets representing over 40% of their revenue stream, begin to pull the plug? It's a fascinating tension between domestic cultural dominance and global geopolitical reality. And for sure, it's something every single investor watching the robotic space is going to need to monitor very closely.